Right, good morning then everyone on Tuesday the 8th of August as we head into European trade for the day. We'll have a quick look across markets, we'll see what's going on. A bit of downside in stocks, bit of downside in risk. Yields lower as well as stocks lower, which is not something you've seen too much of in recent trading sessions, but Moody's has downgraded a number of US banks, 10 of them to be precise, and it is looking at downgrading a further 6, citing higher funding costs, potential regulatory capital weakness, and rising risks tied to commercial real estate loans. So US banks this morning in a little bit of trouble, which has sparked a bit of downside in stock indexes. A couple that were weak Chinese trade data has also helped push stocks lower. Apart from that, there's not really a lot going on. You flick across the different news sources, and really that's kind of all that's gone on over the course of the evening. Yeah, you can see oil prices were a little changed on Tuesday after China reported a sharp monthly drop in imports in July, which reinforced demand fears, though that was offset by supply concerns from Saudi Arabian and Russian outputs. And you can see also then here, oil prices dropped 1% on fears of weaker demand. So oil slightly lower off the back of weak demand from China, somewhat offset by Saudi Arabian and Russian output cuts. But I mean, it's kind of a pointless article, isn't it? It's like giving one reason for it to be down and then another reason for it to be up. So, well, you got to be a little bit careful with the news sources. They'll always write an article to suit the narrative. You've got to be sure that they're giving clear one-way direction in order to take the information and go and use it in your trading. But US equity futures, European equity futures, Asia Pacific equity futures all lower to start the day. We are still half an hour away from that European session, so it'll be interesting to see how that opens up at 8 o'clock, and does that direction continue on into the trading session for the rest of the day. The last time we had we made Fitch downgrading the US, and that was the whole of the US. It wasn't just a few banks. So that started the day negative and then accelerated as the US or the European session opened, should I say. So do we get the same sort of follow through? I'd say probably not, but there's definitely a scope for some further downside in today's European session if markets run with that theme. Bond yields lower across the board, which you've spoken about obviously a couple of minutes ago. A bit of a safe haven play, you'd have to imagine, off the back of stocks being lower. Stocks being lower have also dragged the Australian dollar and the Kiwi dollar lower as well. Weak Chinese data helps drag the Australian dollar and the Kiwi dollar lower, so a good recipe for Australian dollars and Kiwi dollars lower over the course of the Asian session. You can see oil down slightly again this morning. Apart from that, you got US dollar strength across the board, which is maybe a bit of a safe haven play. I mean, yields are down, stocks are down. Yields lower has driven the US dollar lower, but a bit of a safe haven play off those, a bit of a trouble with the or off the bit of kind of negative developments regarding a number of the banks in the US, plus stock index downside. The fact that the US dollar is up across the board with yields lower would suggest that bonds are being purchased, US dollars being purchased off the back of some safe haven flows from stock index downside. So that's kind of where we're at. No massive moves overnight, nothing too major to start the trading session today. You can have a look across, you can see equities have began to roll over a little bit, but they were up in yesterday's session, up pretty well in yesterday's session. Certainly across the S&P and mainly really the Dow Jones. The Russell and the Nasdaq had lagged behind, which is a bit of a clue that if stocks were to sell off, you'd prefer to sell the Nasdaq, and the Russell certainly wouldn't be jumping in front of the Dow Jones as they had such an aggressive rally yesterday. So that's how I like to work with the stock indexes. If I'm going to be long stocks today, you want the Dow Jones, you probably want to back that one, maybe the S&P. If you're going to be short stocks, the Nasdaq and the Russell are the ones to keep an eye on for some downside. The DAX not doing much. The FTSE up slightly yesterday, down slightly again today, or should I say the Euro stocks, FTSE sideways as well, albeit slightly lower in today's session. So no clear direction across European equities, across US equities. There is a bit of direction, but you are still within recent ranges. You have not broken out of any ranges. And in order to have sort of more conviction, you will want the breakout of the range and some markets to show its hand instead of trying to guess or anticipate. You can see Aussie dollar, Kiwi dollar lower. You can see Euro dollar slightly higher. This resistance level that we were looking at yesterday on the dollar index has held firm. You've had 2 attempts at it over the course of yesterday. Or this morning, should I say. One of them being this morning. You've come back up, tested up here. You come back up, tested it again. Market's reluctant to break up through that level and has bounced back pretty well off of that so far. Now, US dollar higher in today's session, but has rolled over in the last couple of hours. Now, does that cause an unwinding in the equity shorts? Have to see, but I don't want to read too much into it before we get into European trade for today. Again, this is trapped in recent ranges. This could easily reject off some, these highs up here, this resistance level up here. So I'm not entirely confident about that move starting just yet. I mean, it might get up through these recent highs there and then test 110.40, but really want markets to show their hands a bit, and markets pretty range bound to start the day. Dollar yen pushing higher now. That's a bit surprising with the downside in US yields. Now, these US yields continuing lower, as I said yesterday, should spark some downside in the US dollar. Now, the fact that these have rolled over overnight, probably a contributing factor to the US dollar rolling over as well. That started at 3 o'clock and moved lower, and this move lower really started at 2 o'clock. So if yields continue lower, if bonds continue to be purchased and yields continue to push lower, that is then a situation where the dollar should then push lower. I mean, both yields are pushing lower, 10s and 2s as well. So if it was just one or just the other, a little bit more tricky to read into, but the fact that we got 2 pushing lower would suggest that if these do continue lower, US dollar downside seems somewhat inevitable. Something to keep an eye on in today's session is oil. It's off some demand concerns from China. You have had an extremely aggressive rally in oil, a bit of a move to the downside and a bit of flush out of long positions wouldn't be too disappointing. You can see a bit of that, a bit of a head and shoulder. You do have a bit of a neckline across here, so that's something I would keep an eye on in today's trading session. Bit of a move below that could spark a move back down towards these lows, which would be healthy for fresh dips to be bought in oil. But it's come a long way in a short space of time. These moves always end one way. You always get a pullback at some point. Not the best way to start a trade idea is to look at a trend and think we're due a pullback, let's go against it. But if you do get the clear price pattern, if you do get the clear head and shoulders and you break out through the neckline, that is markets showing its hand that they are in fact releasing. There's no point in trying to call, say, these highs up here where they are technical higher highs showing trend continuation. Yeah, okay, the odd time you'll catch this move here, but you get nailed here. And the chances of catching that move lower are obviously a lot less. Well, that is sort of where we're at in terms of markets this morning. You can see the economic calendar. You can see some trade balance figures slightly negative in terms of in terms of China this morning. Inflation from Germany not giving us much in either direction, still pushing lower, 6.4 down to 6.2, but not pushing lower at the rate that the Germans would want, but the ECB would want as well. The inflation print, the month over month figure, 0.3 consensus, previous 0.3, actual 0.3, and that continues to grow at far too fast a pace for the ECB. 0.3% multiplied by 12 is obviously 3.6%. That would be a yearly cumulative figure, which the central bank wants 2%. It's nearly double what the central bank are hoping for. So inflation still positive, probably a reason again for some upside in euro dollar. Will ramp up bets of the ECB continuing on their interest rate hikes. So in terms of data later on today, there's not a great deal. There's a couple of speeches out later on, but no high impact data. Again, the main focus of attention is Thursday, which we will speak more about as and when we get around to it. But things to keep an eye on today. Oil, I think what we're looking at on oil, worth keeping your eyes on today. US yields, 10s and 2s, both pushing lower. That means you'll keep your eyes focused on gold as well. which will also mean you keep your eyes focused on the US dollar. This level holds as long as we're below this level. You'd probably favor downside in the US dollar. The fact that we've had those high inflation prints from Germany means euro dollar upside is not wouldn't be too surprising over the course of today's session. These short-term highs will be important. If we can break through these short-term highs, I see scope for a kind of a 30 pip move higher, certainly until this bit of a level up there, which would be these lows down here in the dollar index. So US yields lower, keep an eye on that. Head and shoulders on oil, keep an eye on that. US dollars obviously as well, with yields lower, brings gold into focus, and euro dollar through the highs off the back of some German inflation would be my main focuses of attention over the course of today. But yeah, that is it from me. We'll be back again for another video later on in the session before the US log on for trading.